Welcome back, guys. Today we're going to do a quick analysis of GameStop. It is up 70% today, basically a meme rally. So we're actually going to do a fundamental analysis of this company. Now, I know that the reason people are buying it isn't for the fundamentals, but usually companies do end up going back to their intrinsic value. So we're going to find out what GameStop's real intrinsic value is today and why I would never touch this company, especially after this massive run up. So over the past 5 years, we're up 1,300% because of this little rally here, and yeah, we're just up a lot today, 70% today, basically vertical line. Yeah, pretty crazy, but we're gonna take a quicker look here. Now, market cap of $9 billion and a price to earnings ratio of 800, which is extremely high. That's already a bad sign. Taking a look at their statements, let's look at their revenue, and their revenue is declining. Wow, so surprising. No, people aren't going into the physical stores for games anymore, so it makes sense that their revenue is declining, and also their profit margins are very slim. They actually lost money every single year until last year. They actually made a tiny bit of money, and the only reason they made money was because of a non-operating expense. So I guess they made some money on some cash that they hold. Yeah. Otherwise, they dilute shareholders a little bit. Uh, yeah, they dilute shareholders. Balance sheet. Balance sheet's good, so that's one good thing about this company is their balance sheet. They have negative net debt of negative 600 million, so that's good. And cash flow. What are they doing? Well, cash flow is negative, but they also don't buy back any stock. Looks like they haven't issued. Well, they issued up a lot of stock in 2021. And they don't pay any dividends. Let's take a look at their stats, take a look at their margins. Their ROIC is very super low, and their net margin is negative most years, except it was positive, basically 0% last year, just because of their interest on cash. Let's look at their analysts. What are the analysts thinking? Well, they're not going to be making too much money, and it looks like the analysts are projecting a negative 9% revenue decline and a negative 5% revenue decline. Let's look at the stats, see what their short percentage is. And short percentage is 27%, massive red flag. You always want to stay away from businesses that have massive short percentage, unless you're trying to short squeeze, which usually that's the reason why people are buying GameStop is to short squeeze people. But yeah, it's a bad idea after the short squeeze has already played out. Bad idea to buy the company. Here's the fundamental analysis that I like to run. I run it through a spreadsheet that I have, and if you guys want to try the spreadsheet, just check the link in the description. You can use it for free. You just have to change the yellow boxes here. So, yeah, I put the EPS estimate, revenue estimate here. Buybacks is 0, negative net debt. Discount rate of 10% because I want a 10% return on all my stocks. And an exit multiple of 10 because it is a dying business. And so an exit multiple of 10 makes a lot of sense. You could maybe push this to 15, but yeah, it's a dying business, so we're going to keep the exit multiple at 10. Now, the growth in, okay, we're going to ignore the earnings model for now because this is an absurdly low earnings per share number. I'd rather use the revenue margins model. And this is basically projecting a very optimistic scenario for GameStop. Now, most years they have lost money, and just the last year they had like a 0.2% profit margin. So in this model, I'm projecting their profit. They get their profit margins all the way up to 4%, which that's a big ask for this company, because yeah, historically they've been negative 5% most years, and their revenue growth at negative 2%. This could be even worse at like negative 4 or 5% each year. So I think that this is a very optimistic scenario for GameStop, and assuming that this scenario plays out, then the fair share price is going to be $6.76. That's a far cry from where they're trading at right now. So yeah, definitely stay away from this business, and yeah, don't get destroyed. Don't get your ass handed to you on this stock. Let me know what you guys think in the comments. Let me know if I missed anything. I don't think I did, But yeah, make sure to hit that like button, and I'll see you in the next video.